So Morgan Stanley had an investor meeting with Voltas, and here are some of the key takeaways that we're seeing from the company. So first, I'll just talk about what is the stock rating which is given by Morgan Stanley. One, it is an overweight stance with a target price of around 844 per share. So that is what the industry overall view is as well. So this is what is the target stance and target price as well as the overall stance of the of Morgan Stanley on Voltas. Now talking about the other key takeaways that are actually coming in. So talking about the UCP business. Now in UCP business, the window AC is 100% locally sourced from OEMs, while the split AC, the ODUs, are manufactured in-house components and manufactured in-house, and the components are sourced locally as well as they are imported. So talking on that front, the company has made investments in molds, and now the company said that around 65 to 70% of the IDUs are now imported, and previously they were importing around 85 to 90, which was 2-3 years back. That was the ratio, so that has surely seen a reduction over there. And in the so that is something that they say that over the next couple of years, now 70 to 80% of that also will mainly be locally sourced or produced in-house. Is that what they'll be looking at? Talking more on the import front, so Voltas is import dependent on compressors and controllers which are still imported from outside India. So the company is saying that now they're exploring more possibilities for in-house component manufacturing, as well as except for compressors and controllers where it could consider maybe some joint development, but components mainly they're looking at in-house. But there could be something for compressors that they may be looking with joint development. So that is something interesting that we're going to watch out on the play front from Voltas and how that actually plays out in the PLI scheme. Now obviously if you're going to see the market share gains of the company is saying that they gained market share over 200 basis points in FY21 YTD, that's year to date for this year, and it is quite broad based. They've been driven by a combination of factors, is what the company is saying, like sourcing, supply chain, quality, value for money of the products, and innovation based on the customers' feedback is what has helped the company gain market share. Now certain points talking about the project business, the company is saying that the executions has reached around 65 to 70% levels, and this is mainly driven by site as well as labor availability. However, there are some concerns still remaining on the productivity fronts due to the overall social distancing norms and all that still have to be maintained. So there are some concerns over there. So the company said that the Q3 and Q4 may still remain under stress in the project business, mainly due to the liquidity concerns, as well as it would take a few more quarters, is what the company believes, to come back to the 6.5% to 7% margin levels. Now overall, let's talk about the risk on the upside. Obviously, what is it? The upside is for the company the strong growth and margins in the UCP business, strong execution in the non-UCP business, as well as faster adoption to JV products combined with lower initial losses, is what Morgan Stanley is highlighting. And the downside risk is heightened competition in the AC segment that could be at margin pressure. Sluggish ordering in the domestic business could affect the company, as well as Voltas Beck JV is not quite successful and cash loss continues from a longer time frame. So that is something of concern over there. But all in all, right now Morgan Stanley has a target price of 844 on the share price of Voltas, and they're using the SOTP valuation. So that is something interesting, and we'll keep an eye out on Voltas.